So I appreciate you letting us work with you on this first run on the Solution Series seminars. I'm going to try and do this quarterly, just to find topics that are kind of outside the norm that business owners typically don't get information on. That's what the purpose of this is today. And with that, I know you know well that I'm typically working with clients to help them get the right people in their business. And this is just to help maximize the overall value of that new employee, but ways to get cash back. Since the government's handing out cash to everybody, we don't see a lot of it going to the small business owners. But it's not because it's not there, which you'll learn in the presentation today. It's just a matter of understanding how to go get it. Is that a fair way to put that, Gerald?
Mm-hmm.
Okay. So with that, we've got a real straightforward agenda today. But the first thing we wanted to do was provide a little chance for people to network and meet somebody they hadn't met before, owner to owner type thing. And I know, Tom, you can appreciate that.
Yes.
Because we all need help. It never hurts to know somebody else has got expertise in a given area. And on this particular thought, any way we can help you or any of your other counterparts, please don't hesitate to channel us through. Well, recently we finished the updates to our Level C Solutions website, which should give a better flavor for the types of things we help clients with, everything from search services to interim management, fractional leadership, project work, which Kim heads up the Prevent group that does project work. As you know, we're starting to dip our toes more and more in the technology world and talent solutions. We've also worked with multiple coaches for executive coaching. And then we have subject matter experts like Gerald that we would suggest could be of benefit to clients in specific areas. But yeah, if you get a chance, please go take a look at the website, and any feedback is greatly appreciated. I think we've got it pretty clean now, but don't hesitate to give us some constructive thoughts back. And while we're here, just especially for your benefit, if you'll give everybody a snapshot of your companies that you have and your expertise, that would be helpful so we can help you.
Okay, so I've got this company called Opango. It's a learning management system and content development. And I'm going to take a wild guess that everybody here has taken an online course somewhere in their lifetime for something. And if you've done that, a company just like ours created that course and created the web application, allowed you to buy it and take it and navigate through it and get a certificate at the end. Our best case study is a company that delivered training 4 times a year in the United States in classroom, and they went online with us, and now they're in Europe, South America, Australia, Alaska, Hawaii. They're just kind of all over the place. And then in my other life, I'm a principal in a cybersecurity company, and my goodness, so both those things are keeping me up at night. You know.
And Jim, you want to give us an intro for you?
Hey, good morning, everybody. My name is Jim Steinmark. What do? I own a couple of companies. I own a technology company that does C-suite and board of directors executive advisory services. So essentially what I do is I just help companies with their IT technology strategy and how they can improve their business through technology. I also own an executive coaching company, as well as an exterior cleaning business. So never get bored. And then I have the great pleasure of also spending time working with Brad with his companies, Level C. So I'm very pleased about that. The best way to connect with me is probably social media, email. You can also reach me on the telephone too. Through text is probably the easiest in case I'm with a customer, but I'm glad to be here and I can't wait to hear what Gerald has to say.
Yeah, this could benefit you greatly. So if y'all will just take a few minutes as we're going through the presentation to put your name, email, phone numbers, and that in the chat box, then we'll send that back out to everybody later. So let's go ahead and get started with Gerald. As all of us know, just like you mentioned earlier, Tom, cash is king no matter what stage of business you're in as far as the business owners. So cash flow, in my opinion, is critically important. And Gerald has spent, in my head, an exorbitant amount of time and years to be able to help us understand ways to find cash that we may not know exists for us, which is the value of today's presentation. Gerald, which I've known for several years now, is going to help us understand how to recapture tax dollars and decrease our expenses in ways that we hadn't thought about typically from a business owner standpoint. He also has 15 years of wealth management experience, commercial realty, and energy consulting. So he's got a pretty well-rounded background. And with that, he often partners up with CPAs to help them with their clients explore ways to create and find cost-effective resources. He's the father of 3 children, been married 20 years. He was born and raised in Detroit, Michigan, so he survived Detroit. He's been down here in Texas for the past 25 years, went to the University of Michigan. He's got a degree in electrical engineering along with an MBA, and which I'm not sure exactly why he got in the tax arena with that background, but he did. And through that, you're going to find that he's a great family man, enjoys movies. He's got new recipes he's creating all the time, but for some reason, he's got a high interest in updating his base on Clash of Clans. I'm not exactly sure what that is, but that's okay. He sounds like a gamer to me. But part of that is he's a subject matter expert in improving cash flow and through tax savings. He spent 16 years focusing in this particular niche. And if, in my opinion, with that depth of knowledge, it's much more effective for your time to have somebody like Gerald help you than you go spend another 16 years and learn how to do it yourself. But that's just my thought. Okay. So with that, I'm going to turn the program over to Gerald. Thank you very much for being here today. And Gerald, it's all yours.
Well, I appreciate that. And glad to be here. Good to see everyone this morning. That Clash of Clans base, it is a game that you play as a team. So you mine for gold and elixir and other valuables, and together as a clan, you build gold. So I hadn't thought about it, but it is somewhat connected to our topic today, how to work together as a team to do that. I also would say I definitely agree with Brad. Cash flow is always important, right? The cash is king. And when you think about it, as we started talking today, business owners go into business to do what? To make money. And so when they can free up cash flow for improving their business or adding new people, building and establishing new markets, documenting their processes, adding new equipment, depending on whatever the business is, cash flow is always important for growing your business and improving their business. Over the past year, we've been experiencing COVID. Many businesses have been shut down for some period of time, or they've lost revenue because of limitations of occupancy or whatever limitations different states have put on them. The end use of a lot of their cash reserve, their reserve cash, has been that was set aside for times like this. So right now, cash flow is very important for keeping their businesses alive, for moving forward and paying employees, and really just keeping the business moving. Many businesses have been shut down. I guess just to put a finer point on this, on the current state of affairs for business owners in 2020, and now as we move further into 2021, there's a greater need now. While the reality of COVID-19 was terrible for most business owners, it in no way relinquished them from paying taxes. for that the year prior. Doesn't matter how much this year sucks. Last year is what we're paying taxes on. And even though our tax burden is lower because of the effects of COVID-19, so are our resources. Many of us have tapped our savings, our retirements, just to keep our business afloat during this unprecedented time. I'm passionate about helping people take steps. So my intent today is really just to take you on a journey and to show you some possible destinations that you might not have known were available to you. So let me get started with that. So have you ever gone to a new city on vacation and you try to explore it on your own without any research? Now, you're going to find some things, some interesting things, some things that everyone knows about, but you're not going to find all of the things. It's best if you have someone that's been there before you that can say, come take a look around this corner over here. You really need to go over there. Now, just a switch. In America, we have an environment which typically is very flourishing, but there's a part of the country that does not flourish. It's dry, it's dead. It looks like this picture here. It's called Death Valley, California. Now, it's the hottest, driest place in America. No one lives there. There are no farms there. There are no cattle there because the environment just isn't suited for flourishing.
You mean if we run out of cash, this is what our business might look like? Is that what you're saying?
It very well could. It probably has the past year to 18 months, if not longer. Now, this was 2004, this picture I'm showing you. But a phenomenon happened, and they really don't know how it happened. Just because of where it's located, rain doesn't ever fall there. But in the winter of 2004, 7 inches of rain fell in a 24-hour period. Now, nothing happened immediately, but in the spring of 2005, this happened. Now, if you want to Google it, it's called the super bloom. And that's when they realized they had misnamed it. Death Valley wasn't dead. Death Valley was dormant. The potential for beauty was already there. So if I could look into your eyes, I'm going to look into your screen now, I would tell you that the potential for beauty, for cash flow is already here. And the seeds of potential are right there under the surface. And all I really want to do today is just come along. I want to water your lawn. I want to just help you to see all that's here for you in the tax code. And I'm hoping to make tax code sound a little bit more interesting, maybe even sexy. I'm quoting Justin Timberlake now. I'm bringing sexy back. So,
yeah, to the tax code. Yep.
Okay. To the tax code.
It's
30 minutes, I'll tell you.
That means if you're bringing it back, it used to be sexy at one time. I don't get that.
I see it in your eyes, Jim. I see it. So next, I'm going to take you on a path. I'm going to show you a path. This is a path for employer-based incentives. Now, at Snapshot, we help business owners improve cash flow with specialized tax incentives and expense reductions. We're quite proficient at that. But today, we're focusing on a subsection of specialized tax incentives, the employer-based incentives. So as we go down this path, let's remind ourselves, there's more of this city to see. And I'm just going to be your tour guide today. Does that make sense from a business standpoint, Brad?
Absolutely. And this is where it caught my attention earlier in the year when you shared with me the details of this, because there's some major changes in the employment tax laws that I'm sure, unless you just happen to run across it, none of us have heard about. So that's where it ties to the people side of the business. So.
Very good. All right. Brad's on board. And if you guys are okay, I'll give you an overview of this recent bill, touch on 3 areas that we believe are overlooked, to give you a couple quick examples, and we can open it up for general questions. Now, when we get to questions, I will leave the technical aspects to our team because, as you guys know, with PPP, once it's signed, there are new rules, new regulations, new guidance given. So I'm going to stay at the treetops, the flight level. My team will handle the view and really the execution on the street level. Just a little bit more on our vantage point is really of a generalist and a specialist. So we're flying at 30,000 feet, sharing perspective from a higher vantage point to identify these areas worth exploring of immediate, one-time, even recurring cash flow. But then our team drops down to 500 feet to execute on those areas of savings. And we do that without disrupting their business, their vendor relationships, and we do it on our dime. So what do you need to know about this bill? HR 133. Well, it was signed late December, the 21st of December. And unusually, it passed both the House and the Senate on the same day. Now, there was a lot of wrangling and politicking, before that, but it did pass on the same day. Owners are just starting to hear more about it, and there's still a lot of uncertainty about what it is and how to apply it. So in this bill that was just signed, just like the bill before it, what it did was enhance many of the programs that we were already utilizing on our clients' behalf. And it increased many of the payouts to business owners. For instance, those who are hiring people or those who have retained employees during this COVID pandemic, there are programs available for them, like PPP was available for them to get money for hiring and retaining employees and such through the pandemic. The bill included things that hopefully you're seeing flash at the bottom of your screen. Some of these were not permanent. They were year to year. They would sign them year to year. They always signed them, but they made them permanent. They increased the payouts on a lot of programs as well, and they were made in conjunction with something else. Is it confusing and complex? Yes, but rest assured, we're here to uncomplicate and execute on your behalf. So I want to focus on these three. Putting the spotlight first on tax extenders. Now, this one is for new employees or new candidates that are coming on board. So this first tax credit is called, I call it WOTC. It stands for Work Opportunity Tax Credits. And I'll just give you the quick of it. So the federal government is incentivizing businesses to hire what they refer to as disadvantaged categories. Now, they've been doing this for decades. Some of these disadvantaged categories are, and the first one that was actually put into this was a veteran. So this actually started back at the end of World War II, and it incentivized employers to hire veterans. Anyway, they quickly added those who had served time, and for years it stood as the Veterans and Ex-Felons Tax Credit. And over the past decade, especially over the last 5 or 10 years, they've added lots of other categories, things like someone coming off of long-term unemployment. A larger percentage of our population fits into that category now. Maybe it's where they live. They call them empowerment zones. It could be anyone that lives with them that's on some sort of government assistance like SNAP, some youth work programs. So just depending on the type of positions you have, you may have some turnover. You may have some people coming through. And with our system, what you can do is we create a portal for you to help you capture these tax credits. It's more about job creation now than it is about just helping some of these categories. All employers are a great fit for these higher tax incentives, and there's actually over $1 billion in credits claimed each year. My question is, wouldn't you like some of that? Now, I can't see your faces very clear. I have you on a small screen here, but Brad, do you think everyone's okay if we could reduce their federal tax liability by $2,500 or some multiple of $2,500 for every new hire they have?
Oh, absolutely. I don't know anybody that would, from an ownership standpoint, that wouldn't like to reduce their tax obligations. So, yes.
I'm going to go ahead and go with I could do that,
I want to make sure I'm talking to the right group here.
Oh, yeah.
If you're talking about me spending less money on taxes, you're talking at least I'm part of the right group.
All right. Very good.
That's why this was a select invited group.
Now, if you look at our wall of candidates, identify, if you will, who's going to be your next hire. Who is the veteran? Who's the ex-felon? Who lives in an empowerment zone or knows what an empowerment zone is, or who has been unemployed within the past year? Now, my guess is you don't know. Let me show you who's finding out, though. Now, these guys, they don't know either, but they are finding out. How? Well, they have an internal team, or they've contracted a vendor to screen all their incoming candidates. And it's a very difficult process to manage, even for these large companies. That's one of the major reasons that it's only utilized by those that hire 1,000 more people a year. It's the only way they can make money, because it's a very inefficient process. Now, with these economies of scale, that's the only way they can secure their profitability. That might sound familiar to others. Listen, it's also the reason most small and mid-sized firms, either one, they don't know this program exists, because even those that provide this service, they can't make money on smaller accounts, or they don't know how to leverage it to their benefit. And the question so far from what I'm picking up on the call is, well, what if I don't hire 1,000, people a year? Well, that's okay. The heads up here, we are the leverage I was speaking of before. That is what we do. You are our market, and we can help you get those credits. Should you choose not to engage and screen these new hires for credits, then potentially you're losing, on average, $2,500 in federal tax credits per employee. And these are tax credits that you can use now, dollar for dollar offset against your federal tax income, or you can actually carry these forward up to 20 years.
And this is now what you do helps anybody that hires anywhere from 1 person to 10 person to 100 to 1,000.
And that's absolutely correct.
Okay.
That's right. And just to tell you a bit more about that, here's the market. I showed you those who hire 1,000 or more, they represent 0.3% of the market. That blue area, that's where we operate. This program is commonly retroactive, as I mentioned. So clients will ask us each year, hey, are we going to have that WOTC credit? And our response is, well, yes, don't worry about it. They sign it every year. And usually what happens in December, Congress says, well, congratulations. We're going to continue that hiring program, that WOTC program this year. It's 11 months late, but they do. It's too late if you haven't been utilizing it. But now they did something they'd only done once in 35 years. They made it permanent. Not for 1, not for 2, not even for 3 years, but for 5 years. I think it's time for Main Street business owners to take that money off the table and put it in their pocket. You can raise your hand or give me a thumbs up in the chat if you agree with that, but I think it's time for us to definitely do that.
Yes.
The second tax extender is the disaster retention credit. Now, I will tell you now, this is not an industry term. We coined it, and it's interesting to see other national organizations begin to pick up and utilize your glossary. I guess that's an intangible compliment. This bill offers disaster relief support to individuals and employers affected by natural disasters. It should be a list coming up now of just a few of the states that were recently added. So if you had operations in any of these states, you may be eligible for disaster retention credit. Now,
So let me ask you real quick. Does this also apply if you start in today's virtual world, if you start hiring virtual employees that happen to live in Tennessee, but we're based here in Dallas?
It can. There's some stipulations here. The key is, how do you prove if you have operations? So if they're operating out of an office that you're paying, you don't have a lease for, then yeah, that establishes occupancy in that area, in that county. In fact, one of the 282 counties nationwide that we continue to add to.
Okay, so there's some nuances here that could be of help, no matter, even if you're based here.
Absolutely, that's
Okay.
right, 100% correct. There always are nuances with this. It is easy money. We help you, get you qualified for that. But doing that, we're averaging now up to $2,400 per employee per year. Right now, we're working on 2018 and 2019.
So you can go retro with this.
This is when we can't go retro. That's correct. That's easy money there. This second area in the bill, called the Consolidated Appropriations Act, and the third tax credit that we're looking at has to do with the CARES Act. Now, this topic received its own section in the bill. If you're familiar with PPP, the Paycheck Protection Program, that was a loan incentivized program to keep people on payroll. There's another program, the ERC, the Employee Retention Credit. That was a tax credit to incentivize business owners to keep on payroll. Now, most business owners that we spoke with had never heard of it. It didn't get a lot of media attention. And if you took PPP, you couldn't take ERC anyway. It was either one or the other. They were mutually exclusive. Now, I've been talking about complex and complicated. This is one of those areas. And they continue to offer up new rules and new guidelines. So again, don't want to get too caught up in the detail here, but recognize the opportunity that exists. There are several levels of specificity that are listed here. But essentially, you qualify in one of two ways. Either one, you were partially or fully shut down due to COVID. So at any point where you or your client shut down for COVID. Second qualifier to look at, and remember it's either or, is we look at gross receipts. So we can use any quarter of 2020 and we can compare it to the same quarter in 2019. And if there was a 50% reduction or more in gross receipts, then you can qualify that way. So just as a barometer of thinking about that, if there were any quarters where there was a significant drop in gross receipts, if so, ERC is one of the areas we want to look at.
Hey, Gerald.
Mm-hmm.
On that last one that you just showed, does that include solopreneurs that have contracts that were not renewed because of COVID?
Yes, it can. Yes, it can. Again, it's very complicated in various levels. What we do, because there are always changes to it, there's always new guidance for it. Once we determine that there is some potential qualification of what some of those areas are, we put you directly in touch with our accounting, our support team, who can work on getting you qualified with the documents that you need, and we do it very quickly. You know, we want you focused on your core business, not for you to become an expert in this. And I will tell you, in this one area alone, there's enough fodder here to keep you the belle of the ball at the cocktail party for a year. Our focus is a little bit different. We don't necessarily want you to be an expert. We want you to have the money so that you continue to grow and prosper in your business.
Awesome. Thanks.
Great question. The second and third points of this, I have them listed together because they're intertwined. So with this new legislation that came out just a few months back, it's changed that mutual exclusivity. They are now allowing business owners who accepted PPP to actually go back into 2020, calculate out and accept ERC. That's up to $5,000 per employee. Now, as we move further into 2021, they extended the program in this new legislation to the first two quarters. So just in short, nothing was taken away. Everything was either enhanced or relaxed. So now what they're doing is taking each quarter and saying up to $10,000 in payroll can be counted. They're increasing the payout from 50% to 70%. So that's up to $7,000 per quarter for each quarter. So that was up to $14,000. And then the same sort of qualifications we mentioned before, either partially or fully shut down or a gross receipts reduction. But even the business impact was reduced from 50% down to 20%. Now, again, this came out in late December. They've had several 100-page notices that have come out since then. 2 weeks ago, I would have said that's it. But just last week, they have now the American Rescue Plan Act, which extends this program now through December 21st. You know, how long is this going to last? I don't know. Will we get another $1 trillion program, you know, for the summer? Maybe. Don't count it, though. I would say act now. If you engage with us, if another plan comes out, we're going to proactively reach out to you just as we do with all our clients. But right now, through the ERC program, potentially is up to $33,000 per employee.
That becomes a tangible number when it's per employee.
How?
You do not want to miss this.
Yeah. Well, these are the things that caught my attention when you and I met earlier in the year. Because Main Street business owners, small and mid-sized business owners, typically don't get this information. And because it's so complex, even if they got at least a highlight, they typically don't do anything with it. So, yeah.
Exactly right.
So that's why I appreciate the relationship we've got and that we can champion to help some business owners along the way, because we all need cash. Yep.
Maybe.
And it's legal.
And it's legal. That makes it even better. That's right. Yeah, no, I will tell you for all the things that we do, including this, we want to get everything that you deserve, but we're only going to put forth what we can document and prove. We stay in the solid area, but there's more than enough to help us strategically help clients. And just kind of round that point out, this means, as you see on the screen, the second round of funding for 2021, employers can now coordinate and claim both PPP round 1 and round 2. We can now get ERC for 2021 as well as 2020. So tremendous amount of opportunity here if you know how to coordinate all of those.
And for the small business owner, that may be enough to carry you a long way in today's world. Yeah. Okay.
Absolutely.
Keep going. Don't let me slow you down.
And you hit it weird. There are many businesses that have qualified for up to 6 figures of this. And it sounds like I just want to ask one more time before we move on, just if everyone's tracking with me on this so far. Because there's a lot we put up front for you. Okay. Very good. Well, again, just before we move on to examples, I'll tell you, there's more of the city to see. Just a few examples. I picked a restaurant. And the reason I picked it, I figured that everyone has, a community restaurant that they really enjoy, and you want those businesses to stay. You want them to stay around. So I picked just a small restaurant that has a number of employees. They own a commercial property. They were certainly affected by COVID, like most restaurants were. And I picked one that was located in the Houston area. What are some opportunities for them? Well, we can see there's several. And we look at a total savings of close to $500,000 for your small restaurant business. Where would that come from? Well, first is hiring taxes and credits. Now, $12,000, is that anything to sneeze at? Do you know anyone who'd like to reduce their federal taxes by $12,000 a year just for doing something that they're already doing? All right, so now this applies to, if we look at all industries, all sizes, about 15 to 20% of the candidates will qualify for one of those tax credits. Certainly if you're in the service industries, restaurants, hotels, et cetera, auto dealerships, certainly a higher percentage of employees who tend to qualify, and they tend to qualify for some of those higher amounts. I didn't tell you the range before, but the range, the average that we have is $3,400. Industry average is about $1,200, but that's on up to about $9,600 per employee. Again, anyone hiring one or more employee. Now, one thing about this, what you mentioned before, many of the things we do that we talked about are retroactive, meaning we can go back and claim them. This one is different. This one, all candidates have to be screened before or on the date of hire. Day 2 is too late. It's federal government program. So every time I think about this part, I think of, and I'm probably telling on my age here, but if you guys remember the Jerry Seinfeld, and he has this one episode with the suit Nazi, that he has the best suit in the neighborhood, but you had to approach it the right way. You had to move in his place the right way. You had to place your order with no extraneous information. That's kind of like this. And if you didn't do that correctly, you would excuse him. He would say, no suit for you. Well, that's kind of like this. If you don't do it correctly in the right time frame, in the right way, no credit, no tax credit for you. That's what this is. But again,
that sounds like our government plan. Yeah.
It does. And it's operated like that for about 40 years. Again, even in that example I showed you for the restaurant, where the most of that is still related to what we call the COVID employee retention tax credit. That's immediate money that they can put to use to offset the corporate portion of payroll tax. So it's of immediate use.
Okay.
But just a switch example, switch industries. Figure, everyone on this call is getting their regular dental checkups, and so they know a dentist. I pick a small dental office, few employees, again, much less turnover. They own the property. Certainly we know that many of them, if not all of them, were shut down due to COVID. I also chose the Texas area here in Houston. So you'll see, again, they only hire a couple people, so only $6,000 estimated savings through the hiring tax incentive. But, would you be opposed for another $28,000 just because they have operations in one of those counties designated as a disaster area? I wouldn't mind that at all. And there's some other things here, but again, we're talking north of $200,000 in this case. Well, Gerald, what if they're not located in one of those areas? Well, same dental office. I have this one located in the Dallas area because in several areas of Texas are not on the map. So if you were unaffected and we took that disaster credit away, again, we're still north of $200,000 back in your pocket. And I can tell you, we've been working with a number of dentists this past few weeks. It has been a lifesaver for them. It's kept many of them in business and has helped some of them become more strategic because they're new locations that they wanted to operate in. Now they have some of the funds to begin to make some strategic changes. And excuse me. Same dental office. On my screen, I think I'm a little bit back in the slides here, but it says, again, in Dallas, they are constantly adding new areas to this, new counties to this. So even though Dallas is not on the map now, like several other areas, you really want to stay tuned to this.
Good.
Again, more of the city to see. So far, the examples I've been using are small businesses. And again, we're all looking at 200 plus of putting back in some of their pockets, but these same strategies are severely underutilized at small and mid-sized businesses. So I just want to take a look at another industry or a mid-sized firm. I chose a manufacturing firm in this case, and you see that the savings are well into the six-figure range. You know, it has certainly the hiring tax credit, the WOTC. This is a credit that, again, if they're hiring every year, this tax credit can turn into an annual tax savings for them. If they happen to be located in a disaster area, and right now we're calculating this on 2018, 2019. You know, if they're in a situation where they can't use all of that particular tax credit, then they get it back in the form of a refund. So,
one quick question, Gerald. So if you're going back to 2018 and 19, if that employee that qualified for these credits is no longer with the company, whether they quit or terminate, does the company still qualify for the credit?
That's a great point. Yes, they can. So even if that employee is not currently on your payroll, if they were during those time periods, they can be included in that calculation. Yes. That's the point. And again, with this one and that one we're talking about, if you can't use it all in this year, you could carry it back, carry it forward, but they'll actually issue you a refund. So now it's cash money. If you're okay with a check from our government.
For $2,256,000, yes, please.
We still have, again, they qualified the COVID employee retention plan. Again, that's up to $33,000 per employee right now. That's a 600% increase since it was created. And there are a few other areas that we haven't talked about that are not a part of the employee retention credit, the R&D tax credit and cost segregation. So, I mean, if I just talk about that savings number, you know, is that exciting yet? I mean, have I made it sexy yet?
I don't know if it's sexy, but it's exciting.
Sexy. Well, I'll take exciting. I'll keep working. I'll do better next time.
Okay.
So how do you qualify? As you mentioned at the start of this, a lot of people do self-censor. They miss opportunities. You know, I said, let's just take a look at it. Let's just have a conversation. So in our 16 years, our research team has been doing this. We've developed our own proprietary software that will help identify these different areas for business owners. So in 15 or 20 minutes, we can determine which areas are worth exploring and, you know, giving them even the potential savings in each of those categories. And the best part of it, finding out, you know, whether these programs are available is at no cost to the business owner. So now, you look at some of the things that we cover. Again, a lot of these changes are, you know, the latest effort to stabilize the economy and provide emergency relief, regardless of the past programs that they may have participated in, including PPP. We've developed a software calculator And this particular one I call 6 tax credits in 60 seconds. But that will give you a breakdown of which tax incentives you qualify for and actually how to proceed. The next few slides just to provide some insight into the range of work we search for in this software.
So that's how you can, at least at a front end with a client, evaluate if this makes sense for them to pursue, because you've got a special proprietary tool that lets them plug in their numbers.
That's incorrect.
Okay.
We've been doing this a while, and we've learned to only participate in those things where the client actually will have a benefit. Those things are forecastable because we've been doing this for a while. So absolutely, we can do that. We spend most of that time actually learning about the business, learning about the firm. As they grow with us, they will find, just the breadth of what we offer and begin to see the depth of what we offer as well. But we can do that in 15 or 20 minutes. The meeting after that, if they decide to engage with us, is, full questions and answers. Nominally how much time is involved on their part, what engagement looks like. But sure, that initial conversation, 15 or 20 minutes, we can gather all we need to know for them to make a decision. Is this going to be fruitful or not?
So, and in fairness to the group, if I'm in sync with you, there's no cost to engage with your firm. You just participate in the savings that you find.
That's correct. That's
okay.
correct. 100%.
So basically, it doesn't cost me anything for you to go do the work and find the money.
100%.
Does that work, Tom?
Free nearly always works. But what you do is you do a revenue share with it, right? You find the dollar and you get some of it. Is that how you do it?
That's correct. If we're successful, then we know where that success lies, then yes, we participate in success. And that's not an extrapolation, meaning we do analysis and we can extrapolate what we could save you. This is based on, total realized savings to you as the client.
And if you don't mind sharing your percentage of revenue share, what would that be?
So it varies based on the service. For these employer retention credits that we're talking about, it's 15%. So 85% to the client, we share in 15%.
That's not bad.
So this is not a trick question, but should most accountants know all of this or not?
Boy, that's a great question. No, they shouldn't. They're really not in the position to know what these resources are. They may have heard of some of them. For instance, here's a conversation I had a few weeks ago. There was a potential client that we had been talking with. I've been trying to get in contact with him for the better part of a year. Finally was able to get a conversation with him, and he said, well, listen, I've had my CPA with me from the beginning. If you can, give him a call. If he thinks we ought to go forward with this, then we'll go ahead and do it. So talked to him on the phone, had that 15-minute conversation, and I stopped and said, well, listen, do you think that would be of interest to your client? And he paused and said, Gerald, that would be of interest to all of my clients. He said, you would have to specialize in this. He said, I've heard it mentioned. He said, but I don't have the time or the resources to look into all of these things. And then, it's kind of unfair to figure out each one of my 500 to 600 clients who this would apply to. He said, I would actually have to get rid of my compliance practice in order to do this. I just don't have the time to do that.
Right. Yeah.
And we work side by side with them. So this isn't, throwing them to the curb. So we do the work, but they still have to file the forms. We're not accountants and CPAs. Our firm is more engineers and tax attorneys, project managers, and things like that are capable of securing these programs. But again, the CPA has to sign off on them and file them in the end. So we're actually a benefit to the CPA because we have the resources to facilitate these programs, but we want to help them so that they can actually help their clients. So
have your CPA get in touch with Gerald and say, work with him.
Absolutely.
So Gerald, Tom said and Brad said about going backwards. How far can you go back, or is it dependent on each one of the programs?
It depends on each one of the programs. So like for the disaster area, we're now going back to 2018 and 19. ERC was created in 2020, so we can go back as far as 2020 to capture that. when we talk about some of the other incentives programs like property ownership, we can go back, 20 years and capture that, accelerate that depreciation and do that. For the research and development tax credit, for anyone doing anything technical, I know both of you guys are involved on that side of the equation. Well, on day one, we're actually doing 5 years of work at one time. Right now, we can go back into tax year 2017, 18, 19, 20 right now, and then we begin to look forward into 21 and going forward. So,
Thank you.
one of the benefits of working with us, a lot of these things, when you get into them, do overlap, and you can't double count in a lot of cases. Because we're working with all of them, we know how to maximize those programs for your benefit.
Sweet.
Good. Now, I'll just end here. Just with our software, just to give you a little bit of breath for the types of things we cover. I believe on the screen now are just some of the areas I've mentioned for the hiring tax qualifications, some of the major categories, and some of the specific relating to hiring tax incentives. I believe on the next screen, you will see on the state and city level. This is not all of them. This is just pick a few of the states and pick a few of them that we concentrate on there. And finally, we're kind of the anti-Nike, I guess. It's don't leave money on the table, just don't do it. But then number two, you want to find the money. The most effective way to do that is just schedule a call with me. 15 minutes, we can determine what those areas of savings are, how much you qualify for. And again, I understand everyone's busy. So if you don't have 15 minutes, then we can send you the tool to help at least get you started on that right path. And then number three, get the money, the key thing. One of the things I was mentioning to somebody is that you can either continue overpaying 100% of whatever you're overpaying today, or you can pay us a percentage of the savings to have us go lower your taxes and expenses. There's not a lot of friction there.
So in respect of everybody's time, because we're just hitting our 11:30 time frame, do y'all want to go a couple more minutes, or do you have more questions? I just don't want to abuse your time frame today.
I don't think I have any questions about it, but if he's got another couple of bars he wants to hum here, I can sit here.
Okay, I was going to stop and open up to any questions that anyone may have. I know we covered a lot of ground. I covered 5,500 pages of a bill from December, hundreds of pages of new notices, and then just as of last week, another bill. So it's quite a bit to digest. If you're not already familiar with some of these things. So this might be a good place to stop and just end on some questions if there are any further.
Yeah, and kind of like you and I talked about this, all these programs are something you could do yourself as the owner, or we could just simply connect with you and not worry about it, and you can handle it.
That's right.
Okay.
Brad, just because I can do it doesn't necessarily mean I should do it. I have plenty to do. I'll tell you something happened to my company last year, which I don't think I've even found anybody even heard of this happening. I was sitting there minding my own business, and I get an email from the IRS, from the SBA, telling me that click here and we'll send you the money. And I called up my CFO and I said, "Is this for real?" And he said, "Yes. Is there any reason why I shouldn't do it?" He said, "No, I hit the go button and that money was in my account the next morning."
Wow.
It wasn't a PPO loan. It was called an EIDL, but I didn't apply for it. And my point is, I was just sitting here not knowing anything, and all of a sudden, the cash fell out of the sky, and there it was. Now, have you heard of that? Does that sound familiar to you?
Are you asking me or Brad?
Yeah, sure. Yeah.
Yes.
Is this familiar to anybody?
We have heard of it. That's not one of the programs that we do. That's typically the CPAs and CFOs are involved in that.
Yeah.
But yes, we have heard of it.
The weird part of it is I got another email from them just the other day that says, "Hey, we've changed everything, and now you can qualify for another round of this if you want it." Well, I mean,
all right, it's free money.
You're in the right catbird seat there, Tom. Yeah.
What?
you're in the right catbird seat if people keep sending you money.
Well, yeah, that's the deal. But when the first time it happened, I thought it was a scam or something. That's why I called up my CFO buddy, and he said, no, it's real. Hit the go button. So I did, and there you go.
Good for you.
Yeah, good for me.
Well, if it happens again, I'm coming over and I'll bring lunch.
Well, they claim it's going to happen again, but they haven't contacted me. They said I qualified for it, and all I had to do is reply yes. They said they'll send me an application. So we'll see. We'll see if it happens.
Good. Well, yeah, so from my standpoint, especially in the people business, my focus has been on helping clients find the right people and the right talent for their companies. The thing I think ties in with what Gerald does is these programs can help offset some of the actual cost of that employee being on your payroll. So that's where I see it tie together. So thank you very much, Gerald. We appreciate your expertise. I can assure you, I am not going to go read 5,500 pages of tax code.
Oh, yeah, don't even think about it.
That's not happening.
By the way, Gerald, we connected on LinkedIn last December, as I just looked. So I have met you somewhere or something anyway. So there you go.
We're good. Look like we need to reconnect.
Yeah.
Why don't the three of us go have coffee, Tom? There we go.
Are you buying, Brad?
I'll buy coffee. Absolutely. I'll even get you donuts. Yeah.
You see, Gerald, see how easy it is to find money?
That's it. That's right.
Jim, I think you can use this because you hire a lot of veterans in your business. That's where I think it's be of value to you.
Yeah, no doubt. Especially the retro part of it with the multiple businesses that I have. And I'm definitely going to share this with some other people that need it as well.
Because I know cash always helps in your line of work. Yes.
Oh, yeah.
Yeah. Well, thank you, Gerald. Do you have any other thing to share with the audience?
No, I appreciate the time. I'm glad I was able to share. I was hoping for sexy. I'll settle for exciting. So I appreciate the opportunity. This was a lot of fun.
And with that, if I'm in sync, you were through Kim's help, not that you and I can do this, but she's going to also send the tool that you've got to this audience so they can run their own test version, so to speak.
Sure, be happy to do that.
Well, gentlemen and ladies, thank you very much for participating and joining us today. Thank you, Gerald. And it's great to have a subject matter expert available to us like you. And we'll be happy to channel anybody that needs help that we know that we associate with. So thank you very much.
Appreciate it. Thank you.